Everyone talks about gold when things go wrong. War breaks out, buy gold. Inflation rises, buy gold. Market crashes, you probably know the answer. But somewhere in the background, silver has been quietly catching up. It's cheaper. It's used in everything from your phone to solar panels. It is becoming a new big thing in investing. But no one seems to be answering one question. Is silver becoming the new gold, or is it just a shinier distraction? In this video, I am going to compare both these metals on 4 powerful parameters, and by the end of it, you will have a definite answer. Let's start with what drives them all, their demand story. Gold's demand is driven by 3 pillars: by central bank, investments by retail investors and institutions, and third, by people like you and me when we buy jewelry during weddings or festivals. Therefore, gold's demand is driven by emotion, security, and tradition. Silver, on the other hand, is a dual-purpose metal. While it has a store value like gold, major portion of its demand, more than 50%, comes from industrial application. From solar panels and electronics to electrical devices and medical devices, silver is a functional metal. Therefore, gold reacts to fear and silver reacts to innovation. Gold might shine during crisis and silver could ride the next industrial boom. But industrial demand alone does not guarantee better returns. Other factors like geopolitical tension or sentiments, etc., could also affect the price. Well, talking about returns, which by the way is our second parameter, you will hear a lot of noise around how silver could outperform gold. But does the data back it up? If we just look at the last 1 year, Nippon India's gold ETF gave a return of about 32%, whereas DSP's silver ETF returned around 18%. That's a sharp contrast, but short-term numbers could be misleading. From 1995 to 2024, over nearly 30 years, gold has given an average annual return of about 7.5% in USD terms. Silver, during the same period, has returned around 6.85% annually. When you add rupee depreciation to this mix, about 3% annually, the INR result comes out to roughly 10.5% for gold and 9.8% for silver. Not bad for either metal, but still gold edges ahead. Within 30 years, there were multiple times when gold outperformed silver. Still, silver was a close second. And with the industrial demand set to rise, some argue that this could flip the chart. So why doesn't everyone just load up on silver? Let's look at our parameter number 3. There is a reason why silver is often described as half metal and half madness. It is not just more volatile than gold, it is more volatile than stocks. While the silver market is much smaller, small change in demand or supply can send prices shooting up or crashing down. Silver is unpredictable, unstable, and occasionally exciting. And if you are investing for peace of mind, probably you already know which one fits better. But there could be a question: why can I not invest in both the metals? Here's a twist. Let's look at parameter number 4. Don't just pick assets that grow. Pick assets that don't grow together. I didn't say it. Harry Markowitz introduced it in its modern portfolio theory. In other words, diversification is not about having many things. It's about having uncorrelated things. Now here's the problem with gold and silver. They move together. Their correlation sits around 0.7, which is quite high. When gold rises, so does silver. And when gold crashes, silver does not save the day. This means that if you already have gold, adding silver does not lead to diversification in your portfolio. Also, if you already hold equity, then it would be better to have gold because the correlation of gold with the stock market is lesser as compared to that with silver. More importantly, when the world was hit with crises like the 2008 financial crisis or 2020 COVID, gold steps up as a safe haven and the silver lags behind. So while silver might offer industrial upside, but it does not protect you when things start to go wrong. Now coming to the big question, should you be investing in silver at all? Based on all the parameters that we have discussed, gold is less volatile, more stable, predictable, and has performed better during the economic downturn. Silver, on the other hand, is a more tactical play. It can deliver strong returns if there was a supply crunch or a sudden spike in the demand. But it is hard to find that opportunity, and for most investors, they lack the tools, the data, and patience for it. So, for most people, gold serves the purpose, but make sure you don't make this mistake: betting your entire portfolio on either of these metals. Yes, gold and silver are useful, but they do not compound like equity. They do not generate income, and they do not consistently beat inflation. A good portfolio has equity for growth, debt for stability, emergency fund for life surprises, and a little bit of gold for global meltdowns. What about silver? You can consider it for short-term opportunities only if you have the room, the risk appetite, and the reason. So, is silver the new gold? It's trying to be. And in some ways, especially industrially, it's getting there. But as an investment, maybe not yet. So choose wisely of where you want to invest and not just based on the latest hype. I hope you like this video. See you in the next one. Until then, happy investing.